The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. And of course, every day we meet at this time.
The following takes place between 2 p.m. and 3 p.m.
Every day. Anyway, we've got kind of an interesting market here. We are up about 40 points off the S&P cash's low of yesterday at 1853. Volume is very good in the indexes, very poor in the actual stocks. In fact, a lot of ETFs showing some massive divergence between the two. If you are bullish in this market, what you wanted to see is this market go down into the lows with a light volume, not rally into higher highs without the same kind of volume you saw higher. And I got to say that if I look at the stocks, not just at the index, there's some massive divergence as to where the volume is coming from. It seems to be massive in the big indexes, poor in the individual ETFs, and poor in the individual stocks themselves. We'll have to see how today ends up. But there's kind of a deal where you want or don't want the market to really go up into a 3-day weekend. If you're bullish, you want the thing to kind of sell out and be that and be kind of done with the selling, that no one was willing to sell anymore. You go up like this. What it does do is mean that many shorts cover. And as we've talked about before, at the Christmas season, you get a lot of people that cover. And that's when the next big down drops can really happen, because you don't have a bunch of people standing there waiting to cover for every dollar down. If it drops, there's not going to be a bunch of natural buyers. Now, I think there's still some shorts. It would just be better if you wanted to be long to make sure that most of them were gone. And too many people talking about already finding a bottom out here. And not enough whining and screaming and gnashing of teeth to make me think that we've had one yet. Many people think it will come next week. I do not know that, but I do have to say that probably the way to make the most money for me and my trading style is to sit on my hands. I'm watching. Well, we're actually short in one of the newsletters of stock. And I think we had 3 million shares yesterday, something like that, 800,000 so far today. And it is rallying. It's up a little over a percent and a half. But I'm more than willing to sit on my hands on this and see what we get on Tuesday. Of course, Monday, we will be out of the office here at TFNN. And, of course, the markets are closed. The markets do come back and open in China. So we're going to see whatever happens in China happen on Monday. Tuesday, we will be back and be able to actually trade it. But my guess is that there's going to be a lot of catching up to do with the Chinese market, especially with what's going on. So in the meantime, we've had more intervention in Europe. The central bankers over there have been buying the banks and not really trying to hide it too much. Trying to scare some of the shorts out that maybe had been piling on. But still don't see anything out there that says that issue is over and could get even worse. Yeah. But in the meantime, it is time to get this party started.
That it's all just a little bit of history repeating.
And, of course, on this day, actually, this is the wrong date. Let me find the right day. I think it's 1972. Hang on just a second. I don't know why I didn't. Every once in a while, I forget. What is this? 1970. Okay. Well, let's change that since I can. We'll get it actually right. 1970. Anyway, after 178 years, the New York Stock Exchange finally elects its first African-American member, Joseph Searles III, lest any of its members be embarrassed by having to decide whether to let him sit next to him at the New York Stock Exchange private luncheon club. The exchange gives Searles his own table. Hit by a bear market of 1970, Searles was forced to give up his membership that November, but the color barrier has last been crossed. And of course, one of our favorite movies and everybody that trades is Trading Places. Some of the writers of that movie had talked about reading about this and kind of being some of the kernels that got them started in the whole trading places movie. And of course, a great movie for traders. And I don't know what else you can say about it other than that. But kind of the impotence for the way that the old boys club treated those that were not like them all the way into 1970. What can you say? What else do we have going on out here? That's the beginning part of it. It's rough out there in the oil patch when the ISIS people are actually taking cutting the salaries of its foreign fighters as low oil prices and continued airstrikes on terrorist-controlled oil targets hit back with a monetary jihad. Yes, things are tough out there in the oil patch, but nothing more than, or not any worse than, if you're a fighter and fighting for ISIS and getting paid not much to begin with, and now getting paid even less now because of oil. Here, oil prices go down, maybe you lose your job. Over there, you get paid even less and may lose your life. There is some discussion about whether or not some of these people were just doing it because they looked to them like a paycheck, and of course they were making nothing wherever they were living in a stinking desert, so they decided to come over and at least get a few dollars, probably other things. But even then, anyway, documents kind of show that the jihad is kind of losing its luster as many of these fighters are not getting paid. Kind of almost ironic turn of events out there. Just thought it was interesting. I had one of my subscribers talk about shorting stocks, and of course, there are a great deal of people out there that look at shorting as the boogeyman. It's something that will crush your account forever. But there are some very standard parameters that I use, so I thought I would just bring them up to everybody out here. If you pour through all the data, and when stocks move up and down, there's some things that you will easily find out about being short. One is short interest, days to cover, daily volume, price, implied volatility. We're going to get into all those in the next little segment. Give me a call at 877-927-6648. Email at path@tfnn.com. And, of course, you can post a message in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, I just share with you, I bring this up from time to time, but if you go through the data, you're going to find out that most of the people that get their hands slapped by being short are doing several things. One, shorting stocks under about $30. I'll maybe that's kind of at the bottom range of stocks that I will short. Normally, I want to short stocks that are in the $50 to $100 range. Much higher than that, I like to short stocks using puts. But of course, when action like we've seen since Christmas has come into the market, the put options are generally so expensive that they will never pay off. If you look at the VIX and go back and look at the amount of money won and lost in options, once you get past about 16, options become very, very tough to regularly pay out, let me put it that way, or pay off asymmetrically. And your odds drop pretty severely. So as long as options are fairly inexpensive, I love shorting stocks that are very expensive using options. When events like this happen, then I try to get into stocks that are maybe $50 to $100 for the most part and short those. You're going to very rarely end up with stocks that get buyouts. You can get some short squeezes. But if you're pretty good and you've done your research on the stock, you know that there isn't a big axe out there that is generating all kinds of bogus news. And of course, most importantly, you have a bear market where most of the kind of news that passes in a bull market for bovine effluent does not register. Because, of course, even good news, real good news, tends to be sold in a bear market. So there's a few things out there. If you are doing options, What I try to do is find stocks that have an implied volatility of less than 30. You get an implied volatility with 100, it's just as bad as having a VIX at 25. The chances that you're going to win are pretty small. So if you're literally shorting the equities, what you don't want to do is short a stock that has, 2 or 300,000 shares a day. You want to find something with 1 million or 2 million. You want to make sure that it is extremely liquid, that you don't have a huge short interest in it. And, a lot of those things will disqualify a lot of stocks. They become very tough to find. But if you don't want to get your hat handed to you, a good way to look at these stocks is that they will give you a hard time if you don't treat them right. So you can be a little scared. I'll put it that way. You can be chicken. Let me put it that way. Someone's brought that up in the den, bulls, bears, and chickens. It doesn't hurt to be a little chicken. We're going to go to Michael in Toronto, Ontario. How you doing today, Michael?
Hi, thanks for taking my call. Back in the fall, we had a heated debate on a Friday afternoon about the direction of the TBT. And,
that wasn't me. You can't prove it.
Oh, actually, it was, because it was an archive.
I'm just kidding.
What happened was you specifically created a chart, and you basically you marked off these gaps. There were three distinctive gaps there, and you said don't touch the TBT until those gaps get filled.
Oh, yeah.
So I wanted to update that debate that we had in the fall, and I would like to know what's your prognosis here on the TBT. I mean, can we salvage the patient here and restore it to a much higher level, or what's your gut feeling?
My gut feeling out here right now is that this is part of the manipulation of the markets by the Treasury. So if you had a market that was free and unencumbered by intervention, I would say that I'd have a much better feel about it than what we have now. That is the biggest problem right now if you're either trading the dollar or if you're trading into the bonds, is just what the Treasury and, of course, the Fed is planning to do with these. And I hate being in vehicles that are basically the direction's going to be decided by 5 or 7 people or even 2 people in the case of the Treasury. And that's what makes it so hard. Normally if you're trading a stock like Amazon or something, it doesn't really matter what Janet Yellen thinks of Amazon. Supply and demand, for the most part, is going to kind of take over. But, of course, when you get into bonds and you get into the dollars, they at any time can change whatever they want to do. Now, if you just want to look at the chart, what you would want to see in the TBT, of course, is that this thing went below the January 30th low with less than 6.4 million shares. That's $38.15. So if we go over here and look, the down day, the big down day, was 4.5 million shares on February the 8th. Do you have anything else that even comes close to that? You don't. I mean, they're kind of nice big volume bars for what we have out here, but nothing really that totally blows away that January 30th low. But it's still, at whatever, 4.4 or something. Could it even get a little bit less? It could. But you really need to close back above $38.15 to give you and keep you in that trading range. So what do we have? 36. Huh?
38.50 is your pivot?
No, 38.50 would say that this is back in the trading range.
Okay.
You would want, if you're talking about a standard Richard Wyckoff trading pattern, which is price and volume, the thing would be that it had broke the previous low with lighter volume, and the confirmation that that was a false breakdown is a close above that previous low. That would be the January 30th low that had 6.4 million shares, 38.15.
Okay.
I think you said 38.50, didn't you?
Yeah.
Anyway,
Yeah.
38.15. 38.15 is what I have for the January 30th low. It went through that low. It didn't break it on higher volume. You're kind of moving back into that. But, as far as a chart, not as bad looking as the general market. It's just that caveat. I hate being in these things right now when it's not supply and demand, but what a handful of people decide to do on any one day to manipulate the market. So between bonds and the dollar, I'm trying to stay away from those things and look at things that can't be manipulated as easily by the Fed or the Treasury or the EU guys and Mr. Draghi and
Can you
the
zoom in on those
Japanese.
upside gaps that you have?
Excuse me?
Can you zoom in on those upside gaps?
Yep. You want to hold through the break?
Yeah, okay, I'll wait.
Okay. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back, hopefully, with Michael, if he's still there.
Hello?
Yep.
Yeah,
Okay,
could you
you
zoom
wanted
in
to
on
look
the
at these-
upside gaps, please?
Yeah. We've got a bunch of them long-term out here on the TBT. There's a lot of little ones up here to about 43.75, but of course there's some much bigger ones, much higher out here that at 52, 56, and 63. But what you want to do is, normally you want to see these things to have big breakaway gaps with volume. So if you go back and look at them, the ones that probably stand out, we'll zoom into this just a little bit closer, are going to be the ones with big volume. And, most of those gaps didn't really pop away with a ton of volume. Yeah, what do you have? 1.6 million shares on the 6 when that gap down that day. Is it the biggest? Nah. So a lot of those gaps are probably going to be more like a congestion zone than any kind of actual thing that these things are going to beat against. I think when we were looking the other way down, when did you call me on that?
Oh, it was back in the fall.
Okay, so you don't remember a date.
It was October, yeah, October. See, if you look at the chart back in the fall, it looked like it bottomed end of September. You see, and it began to rally, and all the moving averages, they all converged, right? And it looked like a directional move was forming. Right, and then you said, no, lay off, don't get into this thing because wait till all the gaps are filled. And I said, well, look at the chart, don't you see? I debated with you. I thought we would go up to about 50, but it did the reverse and went down.
Now here's the gaps. I can't remember now from the conversation. I just went back to October to see what gaps were still around, and there were a bunch, but okay. Let me go back and clean this back up here so we can take a look at it. Okay. The big thing is that these gaps now, normally you want to see some kind of event concurrent with it. I mean, either no volume or a lot of volume. You've got a kind of about just right volume. For the 3 bear stuff. So I don't see a great deal in that. Let's go just a little bit longer out here.
What's that second gap? That second gap, it's a long horizontal line across the entire page of the screen.
That's a gap that goes back to, it's a small gap, but it goes back, what is that, about 30, I want to call that about $39. It's, as a function, these automatic gaps and the art of timing the trade charts just kind of go back into what that is. But, it becomes so small over this longer term that it's fairly But there it is right there. I'm pretty sure that's got to be it. Let me see if I can find it here. It's that gap right in that section there. I think that's it right there. It is February 3rd of 2015 is the gap up.
Okay.
So you can go back and look at it. But again, not a lot of volume. So to me, it's not as significant as anything else would be. But there is that 30, what is at the bottom of that day?
So a gap with a
39.51.
heavy volume would be construed as being a like a short-term or intermediate-term resistance zone.
Yes, it would. If there's not a lot of volume there, then generally it's just more of a congestion zone, and it just kind of slowly chews its way through instead of normally just ripping its way through. Was this conversation with Tom O'Brien or something?
No,
was I on his show when you
was
called?
with you during your 2:00 session.
Okay.
And then, see, back then you still had the 4:00 to 5:00 show.
Okay.
Show, and then you just went and ripped into me and all this, and I never archived it, but it's you go on YouTube, we could watch it, but I mean it's the 4 to 5 o'clock session, and you highlighted 3 distinctive downside gaps, which I felt like at the time there's no way the bonds would get up there to 170.
Yeah,
there's just no way.
That's what I was thinking. Is the TLT? Was it TLT?
Well, yeah,
there was a gap up here also that we were talking, if I remember right, and there was we thought it would come back and hit it again. I think it was back this way on the TLT. Yeah, and there was this big gap right above the 125 area back on October. So I'm starting to remember. And that's where we thought, yeah, it's going to probably come back up there and at least fill those gaps back up in here. And then, of course, you did it. I just wanted to look at this one, too. I mean, you've got kind of a blow-off top out here in the TLT.
Yeah, panic buying.
Yeah. And but more important in it, of course, is the longer term that you just went into that gap up here that would gap down after January 30th, 2015.
Okay.
Right?
Is that a high volume bar? Is that a high volume gap up there at the January 2015?
Not that big. It was on 3rd of February, which is the same on the TBT. But yeah, you've got 14 million shares that day.
Okay.
So you do gap down, and you got 14 million shares. You went through it with 21 million shares yesterday.
Okay.
So that would suggest at a minimum, what you would want is a retest of yesterday's high at 135.25. But you can also make an argument that that's an abandoned baby up there. You gapped up, and you gapped back down, and that had a lot of volume today, and then that was it. So today would be considered. I think Steve Rhodes is much more into these now, but you'd almost have to consider that is the blow-off top in the TLT. If you're just looking, if you're not thinking about the gaps, then you would probably say that has to get retested because it had higher volume. But the candlestick pattern minus the volume is extremely bearish.
Now, TBT is the double bear. Okay, what's your opinion of the triple bear, which is the direction TMV ticker symbol? I mean, there's been huge decay on this.
Yeah.
Okay. There's an issue right now that the SEC is reviewing whether or not they should discontinue the trading of all triple ETFs.
Yeah, I don't think that's going to hold. I think they will.
There's a decision coming in the spring. Okay, so the LABD, LABU, FAZ.
I think they'll get rid of. I think they will get rid of some, but not all. If they have,
that's not fair. I mean, you should do one or all of them. I mean, eventually all of them will decay.
No, because some of the people that actually run those are probably being a little liberal with how the split actually falls between the holder of these and, of course, the underwriter of these, and just how far they can move them away from the underlying. And I think that's a much bigger part of the argument that those guys are looking at now. How far can that triple move from the underlying just because the market makers want to stand back? So
they're all swaps.
What's that?
They're just swaps.
Yeah. Anyway, we'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced experience and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we are back. We're going to go through some of these stocks here today that are moving a great deal. Of course, AIG had earnings out after the bell last night, and you can't really say that there was a clear indication of AIG other than it did go through the previous low of August 24th. It did so with some okay volume, but all these stocks came down with huge volume. You could see it. Michael, are you still there? Hello?
Regarding these triple ETFs, I used to trade for 3 years straight the DTO. That's all I traded. It was a Power Shares Deutsche Bank double short crude oil. And I analyzed the components of it, and it was basically the front month WTI futures contract. And Deutsche Bank had structured it such that they had this huge treasury bill inside, so which would limit the decay in the DTO. And I always noticed that when you traded it versus the DWTI, this thing wouldn't decay as much. Okay, and I was thinking that maybe Direction could go and restructure many of these triple ETFs, right, to include a treasury bill or some kind of treasury bond or something that basically the coupon interest from that would basically offset the decay.
That is part of it, but I think everything that I've read so far has been kind of the almost wanton changing of the ETF price away from any of the underlying functions. And of course, some of the companies that actually have those ETFs have their own high-frequency traders rating any kind of stops up and down. And I think that's right now has been the bigger complaint out there. Everybody understands the decay. What most people don't like is the movement of the ETF when there is no underlying real movement in the underlying and unleveraged products. And that's, I think, from the SEC points, that's really where they're kind of ticked off, because they just see these guys as robber barons moving stocks up and down $1.50 at a time with no movement in the underlying, and all they're really doing is just running any stops that they can find. So
okay.
That's that part of it. Now, I would imagine that your part, the part where they're saying that there's way too much decay, it will come into it. But all the articles I've seen so far from the SEC and the articles from FINRA talk a great deal about kind of predatory pirate-like behavior of the people that actually are backing these ETFs. So I think there's a little bit more to that. Like you said, by springtime, we'll probably see a lot more discussion of this.
Yeah.
The volume in those products tells me that there's no way in hell that they're going to allow those things to go away. Will some
Yeah,
of
but
them
you know,
go?
I must admit to you, like I used to actively trade the LABD, and after I saw that news release, whoa! I basically closed out my position here because it became a hot potato now. Because you know they can basically they can make an announcement Friday afternoon, 5:00, that they're suspending trading of these ETFs.
Yeah.
You see, so I mean, until this thing is clarified, okay, like I basically have avoided trading in any of the triples.
Yeah, I don't think that there's a problem as long as they're highly liquid. It's the ones that trade 10 or 15 or 20,000 shares a day that you have to watch out for.
Oh, like the UBT, which is the triple treasury bond. Bull.
Yeah, I mean the stuff with no volume is really what the SEC is trying to get out of, because those are the worst offenders. Those are the people that are literally moving prices up and down a buck with no movement in the underlying. And
the bid and ask spread is really wide. It's like $1.
Yeah, and they're just being obnoxious jackasses underneath that, and that is the biggest complaint. But it's all these ETFs that never really caught on, and I think they want to just clear those out. But that's kind of the discussion I've seen so far.
Okay, all right then. Thank you.
So I have seen nothing in there. I'm on the FINRA and SEC RSS feed list, and I haven't seen anything that really made me think that they wanted to get rid of all of the triples, but they just want to get rid of those that are doing nothing. I think they also want to get rid of the not ETFs, the electronic notes, ETNs, too. So I think that if there was going to be anything that got rid of it, it's going to be those electronic traded notes instead of the ETFs. Okay? I guess he's gone. Okay, AIG. We were looking at this. What do we have? A nice little bounce out here, up on lighter volume. Not that much. Of course, a lot of people are going to be discussing that Carl Icahn and some of the other activist traders have gotten board seats and what's going to happen with that. But I don't see anything that truly changes what's going on out here. You do have a couple of gaps at 56 and 57. Again, none of those really have a lot of volume. So I would much more think that if you were looking at any of these to short, you'd be probably thinking about just using the standard Fibonacci's. Right over those two gaps at 57, 52 is the 0.5 on that. So if you were thinking about reshorting those higher, take a look at those. Other stuff, Activision Blizzard went down to its gap today. For a variety of reasons, sales over Christmas for video games were fairly benign. I'm not a big gamer, but I have to say that I bought a couple of games. I got a couple of games for Christmas. I haven't been able to play them for much. Fallout Las Vegas is one, and it was great. But a lot of these new games, literally, you have to devote your life to it. It's kind of like Facebook. It's not like you can just go and do 10 minutes of it. Well, you have to be buried in it. You have to be working with your feed. And I just quit playing some of the games. And, of course, a lot of these companies are not only getting cash when they sell the game, but they have in-app purchases for additional maps, a lot of other things out here. And not only has some of the new games kind of been weak, and the releases of them have been weak, but the in-app purchases also have been fairly weak because the games are not as easy to play. You can't just play them for an hour. You got to, like Fallout Las Vegas, I've got to build entire towns and cities, and I've got to negotiate with all the people around me. And I could imagine you could spend 10 hours or 15 hours a weekend just playing these games. If you're a 15-year-old kid, maybe not a big deal. If you're an adult, and the market's moving around, a much bigger deal out there, at least for me. So I can say maybe it's the releases of the games and probably the kind of people that can't devote to it. Anyway, energy very big all the way down. You had a big gap out here that's finally getting filled from August 28th, 2015. We'll talk more about this when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I had some emails and requests when I was talking about ETFs out there without a lot of volume so far. IBB is a prime example. There's nothing in here that tells me that the thing has broken the downtrend, and the volume today on the upside, 1.4 million shares, something like that, and 1.6 million shares, and we've had some pretty stiff volume. You get back up much higher. You get into the candle of the 28th of January that had 6 million shares. 1.6 million shares just doesn't make me feel very warm and fuzzy out here that this thing is anywhere close to breaking the downtrend. Just a kind of a nice bounce. Now, does this thing go sideways for a while and consolidate? I just can't. It's hard for me to see that a lot of these stocks keep moving. Now, we talked a lot about Amazon breaking its downside. Let's go back down here. It's downside confluence range, and that's what made me think that this market was going to hell in a handbasket. You don't have that much farther to go up here. If you were thinking about reshorting this market, 544.76 is the top of a confluence out here. And maybe you get that in the next week or something in some of these stocks. But that would be a pretty good area to take a look at. That would also be just a little over the 318 out here. In fact, let's take a look let's zoom in on that, which is 536.67. 550 takes you to the 0.50. But you're probably looking at something like that in the next part of the ABC down. For Amazon. If you got to 544, you're talking about 65 points. That would take you to about 480, which is the previous low out here. So if you catch that, you got a pretty good bet that you at least get a retest of that February 9th low at 474. Some of the stocks actually doing a little bit better today. Microsoft. Pretty much did exactly what it was supposed to do. It came back down into the gap. This gap had a lot of volume to the upside, 135 million shares on the 23rd of October. First time back into it was 63 million shares. Second time on February 8th for 58 million shares, and it's drifting up out here. What I dislike about all of these and why I can't buy them, though, is if you look at the up leg that went from January 20th to February 1st and compare that to the February 1st leg down to February 8th, there was a lot more energy on that leg down, which suggests that maybe you want to be looking at that 382 level to pull on shorts. I wouldn't probably be shorting Microsoft. It's one of the stronger companies out here in the NASDAQ. There's a lot of them like Amazon, to me, that look like have a lot more meat on the bone if you wanted to go and short them. And, of course, if you got in that 4 or 540 range on Amazon, I think you could have a nice move out there. Just have to see what the options look like when that happens. See how much time we've got left here. Just a couple minutes. Let's see what else out here. Some of the other stocks, let's look at some of the others that might be looking like they're shortable. One of the ones I've been waiting for and hoping for is the Panera Bread Company. This thing came down on pretty heavy volume back on August 12th of 2015. Volume was about 588,000 shares. So not all that much volume, but it's been kind of acting as the resistance level. We got right back into it today with pretty much all the volume. I'm going to see whether or not any of these stocks can actually break above previous resistance levels. So when we get back on Tuesday, that will be one that I really am looking at hard. In the meantime, sell when you can, not when you have to. We'll see you back here on Tuesday. Same bat town.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.